Hey people, hey people, hey people, you are welcome to today's episode of Zero to Hero, or should I call it beginners? But I don't want to call you guys beginners again because, of course, you are no longer a beginner. And today, before we quickly delve into our today's business, I want to remind you that just like I said in our first class in the part one, that you need to stick to this channel. If this is your first time of joining us or watching one of our videos, you need to subscribe because you need to go on with us. You need to be with us. It's either you are with us or you are not with us. Because if you need to get the best out of trading skill, if you need to develop your skill sharply, if you need to know what to do in the market, you need to know. You need to get knowledge. You need to get knowledge. And you need to practice right. Just like I said, one of our rules is we must practice rightly. It is not enough to practice. It is practicing rightly. It is the most important thing when it comes to practice, because there is a saying that practice doesn't make perfect, but perfect practice makes perfect. So you need to know what you are doing. You need to stick to this channel. So if this is your first time or you've not subscribed before, maybe this is not your first time, but you just watched one of our videos, this is the right time for you to click the subscribe button so that whenever we post new videos, you will be able to see it and you will be able to get the pop-up notification on your smartphone or your laptop or whatever device you are using. And also, this is also an opportunity to tell you that we also have inner circle. I will tell you a lot more about our inner circle after this lesson. Meanwhile, let's quickly delve into today's lesson. Like I told you, you need to practice rightly. You don't need to know the many things that people draw structure. They use different indicators. Like me, I don't use indicators trading any longer. I don't use indicators to trade anymore because indicators lag it after price is formed. That is when indicators will now be following up. A lot of indicators are lagging. And that is why I am here to share you the good news that the only thing you need to know, the most important thing you need to know about trading, technical analysis as a whole, is price action. The price is always moving, and it is moving from the buyers to the sellers, buyers to sellers, buyers to seller. And I explained before in our first class, I said that going in an uptrend or in a downtrend or in a ranging market. So this is everything about price. Between demand and supply, there are aggressive suppliers, aggressive demand. There is a premium, there is a discount. Everything revolves around price. Everything. So if you understand price very well, you will understand where the market is going and where the market is coming from. So to not take or waste our time, I am going to delve into the price action thing today. And just like if you've not seen the first video, you need to go back to the first video so that you will understand better what we are talking about. When price is making an uptrend, when price is making an uptrend, price makes higher highs and higher lows, higher highs and higher lows. When there is no clear direction in the market, price is said to be consolidating. I called it ranging market. So I normally call it ranging market. Some people refer to it as consolidation. So don't be confused when you hear price is consolidating. It means price is not breaking structures. That is what we are going to be talking about today: break of structures. So once price is making higher highs and higher lows, or making lower highs and lower lows, it means price is breaking structure. So for a downtrend, price is breaking structure downwards. For an uptrend, price is breaking structure upward. So let's quickly delve into it because I would not like to waste our time. Yeah, so when price move from here to this place and retrace back, this is called retracement. Price retrace back into whatever it is that is fueling it, and whatever it is that is fueling it push the price up to this extent, making another higher highs. That means right here, this is the former high, price break structure here. So we refer to this as a break of structure. We refer to this as a break of structure. Price broke structure right here. Right here. You need to understand this perfectly. You need to understand. So this, at this point, price broke structure to form a new high. Assuming price stop right here, that means we are not creating a higher high yet. A higher high yet is not created until structure is broken. So once structure is broken, you can pick your higher high. It means if price should give me something like this, a high, then something like this, then it comes and give me something like this. No structure was broken, retrace back, then give me something like this. Now, this is my new higher high. This is my former high, and this is my new higher high. This right here cannot be a higher high because structure was not broken. I hope you are following me. Structure was not broken right here. So this right here cannot be my higher high. This has to be my higher high. I'm going to show you an example in the normal chart, on the normal chart rather, so that you will understand what I'm saying better. So price comes again after breaking structure, price retrace back into that. This is called retracement. It goes back into whatsoever is fueling it, is going to come back into this region, and that is going to take me to explain some things to you, but not now. So just understand this little concept I'm giving you first, so that when we start to deal with the higher concepts of technical analysis, I just refer to it as higher concept. It's not that hard. Do you understand? But you need to understand these basics for you to be able to navigate those ones. If you fail to understand these basics, so if you have not seen the first video on how to recognize your higher highs and higher lows, your lower highs and lower lows, then you are on a long thing, I'm sorry to say. And this is the right time for you to go back to that videos, so that you will be able to identify what is called uptrend, downtrend, ranging market. A ranging market, no structure was broken. That is why it is called a ranging market. It is in a state of equilibrium. Prices on the lower end and on the higher end are in equilibrium. It means there is no aggressive buyers or aggressive sellers in the market. No aggressive buyers, no aggressive sellers in the market. So price will move up, come down, move up, come down, creates equilibrium, creating equilibrium. Double. Wow, we are not talking. You can trade ranging markets too, okay? But once ranging market breaks out, let's say this ranging market breaks out right here, this ranging market breaks out right here, what will it turn to? It becomes a break of structure. It means structure has been broken. So price was ranging, or whatever, consolidating. Then at one point, it breaks structure to the upside, and it can also break to the downside. It can also break to the downside. You see this process of price moving from this point, breaking structure, it is called expansion, and price coming back into this region is called retracement. Expansion, retracement, expansion, retracement. See, price is moving, it's moving, it's moving, it's moving. So this is just price moving up, retracing back, moving up, retracing back, moving up, retracing back, moving up, retracing back, because something is actually stopping it here and it's not allowing it to break structure. That means there is not enough demand right here to push price. No aggressive demand. No aggressive demand right here. No aggressive buyers right here to push price above this region. So price is going to retrace back into that region to seek more buyers. I hope you are getting me. Price is moving like this from here. Buyers are in the market right here. They push the price up. The sellers say no, not today. The sellers sell more, and the buyers say not today. You are not going to break down here. Then the buyers go. So it is a constant constant plan, constant agreement, or should I call it constant transaction between the buyers and the sellers. So price will keep making this retracement into the buying zone or the selling zone, as long as there is no aggressive buyer or aggressive sellers in the market. So the moment there is aggressive buyer right here, it push price upward. But let's say there are aggressive sellers right here, price is going to make, let's say the price is going to make a downward break of structure, right here to the downside, or a break of structure right here to the upside. I hope you understand me. I really hope you understand me. If you don't understand, you need to watch the video again for you to understand perfectly. So right here, we already know what is called break of structure in an uptrend. So we have another break of structure after price has retraced back into this region, that there is enough demand here to push the price above, and we have another break of structure. We have another break of structure, another break of structure. So we have price right here. After topping out, it retraces back. Then there are aggressive buyers in the market. They push the market up to make higher. So we can successfully say we are in an uptrend, and this right here is a break of structure. Break of structure. That is why we represent it with a BOS. So like unlike this consolidating market or this ranging market, you can see it. Price is making equal lows, equal highs, and it's called equilibrium. This point is called price is at equilibrium. It's at equilibrium. It's not breaking out, so no higher high is formed and no lower low is formed. So for a downtrend, you can see price is breaking structure to the downside. Price is breaking structured, so it's just inverse of the uptrend. Price is breaking structure to the downside. You can see structure is broken right here. Structure is broken right here. I want to structure is broken right here at this top. Then it retraced back into this region, then came back to break another structure. Another structure has been broken. Another structure has been broken. You can see it right here. I just want to, sorry for the cluster handwriting or diagram. You have to just bear with me. I am not an artist. I am a trader. I am just a trader. Oh, I beg you. It's only an artist that will draw you a very perfect line like this, because they already have their measurements or whatever. So price was broken. There's a break of structure right here. You can see price making lower lows, and another lower low right here. So you can see by yourself another lower low. So price broke structure right here. Again, break of structure. So you can see that up here, no structure was broken, because when price come up here, it did not break any structure. It retraced back, broke structure, then retraced back into this, then come back to break structure. So all this move of breaking of structure is referred to as expansion. Expansion. So don't be new to these things. Understand this break of structure. For every higher high that is formed, there is a break of structure. You are going to be needing this in the long run. So you need to understand this concept perfectly. Perfectly. No break of structure right here, but there are breaks of structure in a trending market. In a trending market. So that will lead us to saying, from break of structure, you see, a market in an uptrend, a market can be in an uptrend. Let's say a market is making higher highs, higher highs, higher highs, higher highs and lower highs and higher high. Then one time you see a reversal in the market, a reversal. It's called a reversal in the market to give us, to now change trend. That is called trend change. Trend what? Trend change. Then we begin to make lower lows and higher lows. Lower lows and higher lows. Lower lows and lower highs, rather. Don't mind me. Lower lows and lower highs. You can see it right here. So right here, price is moving up, come down, making higher highs, higher highs, higher highs, higher highs, and lower highs, and higher lows, higher lows, higher lows. Then price comes right here. Then there is a this position right here is called a reversal. A reversal. Let me put it down so that you will write all these things down, and they will not give you problem in the future. So you have to know these things. This is a reversal. A reversal is referred to as change in the direction of the market. So we already know price action is the movement of price from up to down, up to down, up to down, from demand to supply, demand to supply. We already know break of structure. The break of structure is when price is moving in a trending market, there needs to be a break of structure to the upside or to the downside. We talked about expansion. Expansion is whatever is fueling the price from that downside to the upside, or whatever is fueling the price from that upside to that downside to break structure, is called expansion. We talk about retracement. After expansion, price needs to retrace back into whatsoever it is that is fueling it to give another expansion. You understand? And now we are talking about reversal. We are talking about reversal. Reversal in the market, it is called change of character. It is called change of character. So this, I will delete this and use a proper pathway to analyze it for you. So we call this a change of character. Let's say price has been moving up. Price has been moving up. Price has been creating higher highs, higher, higher highs. Then at one time, you see price do something like this. Structure was not broken. Then price will come down. Do you understand? So this right here is a change of character. It's a change of character. This right here is called a change of character, because price, price is now in a reversal mode. So you can see right here, price is making higher highs, higher highs, higher highs, and higher lows, and higher lows. Do you understand? This is an higher low. Then price expanded. But the expansion, we can call this an expansion because there was no break of structure. No break of structure. This actually refers to as an inducement. Whatever. But you know. But now is not the time for us to. This is actually referred to as an inducement. But now is not the time to treat inducement. To treat inducement actually. So let's just stick with what we know first. Then I will explain inducement to you. I will explain inducement to you perfectly. So you can see price right here. Price change character right here. Price change character right here. It means price actually reversed. There was no longer enough demand to break structure to the upside. So suppliers took over the market. Suppliers took over the market from here to push price downward more. So right here, this is the latest low that was created, the latest higher lows that was created, the latest higher low that was created, and price broke structure downward. But this is not, you can't call this a break of structure because we are already in a reversal mode, and once we enter a reversal mode, it is called change of character. Now price will continue to now make series of lower highs, uh lower highs, lower highs, and lower lows. You can see right here, lower highs and lower lows, lower high and lower lows, until there is another change of character. Price will continue to move that way until there is enough demand in the market to make price change character again. Right here, price change character again to now make series of to now make price change character again to now make series of higher highs and higher lows. Higher highs and higher lows. Now you get me. I believe you are getting me. So you see what price did here. There is a change of character right here, and this right here also is a change of character. Is a change of character. This right here is also a change of character. But all these places, we have break of structures. All these places, we have break of structure. Okay, wait. All these places, we have break of structure. 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 We have break of structure right here. Oh, oh, we have break of structure right here. We have break of structure. Then after this break of structure, price decide to change character, to move a reversal, to move in a downtrend. So this right here is a change of character, and after the change of character, price begins to break structure to the down. So we now have a downtrend. We now have a downtrend. You can see structure broken right here. Structure broken right here. That means we are officially in a downtrend. We are officially in a downtrend. Price break structure right here. We are officially in a downtrend. Then price also went ahead and break structure right here, broke structure right here. So you see we are officially in a downtrend before price decided to move up and change character. That means this latest high that was formed has now been broken. But for a reversal to a downtrend, it means this latest low, this latest higher lows that was formed has now been broken. Once the latest higher lows form has now been broken, it is no longer an uptrend. It is no longer an uptrend. And the moment this higher lows that was created, this lower highs that was created was broken, it was no longer a downtrend. Now price has shifted from a uptrend to a downtrend and back to an uptrend. From an uptrend to a downtrend and back to an uptrend. So now, respectively, you understand what we call change of character. Change of character. So I think we need to stop right here to not fill us up with a lot of information whereby we are finding it hard to process. You need to practice this over and over again. So don't worry, I think we still have a little time. I will show you in the chart. I will show you in the chart all this break of structure and all this change of character. So I am going to go right into the chart to show you that the break of structure or the change of character are all what you should look out for. Price is everything there is in the market. Everything. I mean, everything you need to look out for in the market is price. So let's take, for instance, this is a low. This is a low created already. This is a low. Do you understand? This is an higher high. This is an higher high. This, after this higher high, it retraces back to form to give us another higher low. You see, there was, this is okay, let me show you now. This is the high that created this low. This is the high that created this low. Then this low give rise to this high. You see, this higher high is higher than this high. So we are just taking this, for instance, this high is higher than this high. So definitely right here is a break of structure. Right here is a break of structure. Structure has been broken right here. Let me use the our normal break of structure so that you will understand. Right here is a break of structure. Structure was broken right here. You can see the impulsive move. You can see the impulsive move from year to year. You see, even creating a fair value gap, we are going to get there. You see, there is impulsive buying right here. Do you understand? Price, there was a lot of buyers in the market. They tried their best and pushed the market up. So there is a break of structure right here. There is a break of structure right here. Then this right here, creating a higher high, this higher high now create another low. So you can see, let's say there is another break of structure right here. There's another break of structure right here. I know some of you might be asking, why is this not a high? This cannot be a high. You understand? This cannot be a high. All this move you are saying, they are called internal structures. They are called, so there is something we are going to treat in our next class. You are going to be able to differentiate swing structures and internal structures. But for now, just understand basically what I'm trying to teach you. Okay, so when you understand this, you'll be able to now know when a structure is swing or when it is an internal movement, internal structures. So there's a break of structure right here. Another higher high has been created. This is another higher high. This is our lower. This is before our low. This is now our new low. This is now our new lower highs. This is our lower high. This is our lower high. Then you can see right here, immediately price topped out. What did price do here? Price change character. Price change what? Character. Because why? This low has been violated. This law was violated right here. This law, it was violated right here. You can see for yourself. The higher high, then it higher high, higher high. Then its price is supposed to retrace back around around this region, and maybe create another higher high. But the sellers have overpowered the buyers in the market, so they push the market further downward, changing character. So they've changed the character, and now price is now in a downtrend. You can see price now creating series of lower highs. You can see price creating series of lower highs and breaking structure downward. Breaking structure downward. Price is now breaking structure downward. Break of structure. Price is now breaking structure downward. So this is the low that was created. This is our new high now. This is our latest low now, because this is the high that was the this was the high that changed character. So this become our new high. Then any other high that is formed, then this become our new low before the retracement back. So break of structure, this right here is a break of structure. Do you understand? So this become our new lower highs. This, because this high is lower than the high that was formed. This high is now lower than this high. Then we have a break of structure right there, and this is another. We have a break of structure right here, forming a new low, a new lower low. A new lower low has been formed. Then after the new lower low has been formed, we have here, right here, another uh uh higher low has been formed, like a lower high rather has been formed. Then it pulls back, then there is an expansion. There is an expansion, and the market also broke structure right here. And like that, till price decide to reverse again. So you can see break of structure, change of character, break of structure, break of structure. You can see the higher highs, the lower lows, the lower lows, the lower lows created. I believe now perfectly you understand what it means to create higher highs, lower lows, break of structure, expansion, retracement. This right here, this right here is called retracement. Creating, then coming back to break structure is called expansion. So you see, I believe that with these few points of mine, I've been able to treat another basic knowledge of the market. So we will call it a day for today. And of course, if this is your first time of watching one of our videos, you need to subscribe so that whenever we post new videos, you will be able to get notification, and you will rush to the video to watch it over and over again until you master it. Until what? Until you master it. Until you master it. Make sure you keep washing and washing and washing and washing and washing until you master it. Until you master it, you can take a screenshot of all these things so that you master it. That was what I was doing in my early days of trading. Do you understand? In my early days of trading, I took a lot of screenshots, I took a lot of snapshots, and I just look at it. The more you look, the more you see. The more you look in trading, the more you see. So we call it a day. Thank you for staying with me. And Of course, disclaimer, this is not a financial advice. This is just me teaching you how to be profitable in the market. Thank you and God bless you.